Welcome to Voice of the Nation. Just as the global economy is bouncing back from the COVID-19, but the world is facing ongoing Ukraine war and China's lockdowns. These are among risks to global growth. Joining us today is a business advisor, Kun Terrence Walsh, CEO of Primary Asset Partners Limited. สวัสดีครับ
Sawadee Cup. Thank you very
Thanks
much
for
for having
joining
me.
us, Let me call you Terry. Okay?
Please do.
Okay, Terry, it's a lot of things going on now. I'd like you to help us explain that the world is going to face another big recession soon. Any other factors that we should concern? Maybe you tell us step by step. Okay,
Sure,
let's start.
sure. I think right now, there's a lot of things happening that a lot of institutions and also central banks found to be unforeseen. When you mention, first of all, the recession, I think we need to really make sure that everybody is on the same page with the definition of a recession.
Right.
And a recession is really it's an ongoing period, an extended period of economic decline around many countries. And of course, the bigger the countries, the more it's going to influence the world. The world is, as we probably saw, especially in Thailand in 1997, and we saw again in 2007, 2008, the world is very much interlinked. Economies of the world, trade, movement of capital, and these trade relations and financial systems, if something happens to one of them, a large one, like whether that be China, Japan, United States, any of the large EU members, or the EU itself, these will transmit economic shocks around the world, and it will affect every country in one way or another. Some countries less, some countries more. And when we look at the situation right now, I think everybody's well aware that we have the situation happening in Europe. We have in Ukraine, we have Russia that's moved into Ukraine, invaded Ukraine. This has created a large amount of instability, not only within the European Union, but basically globally. There's been threats that we've heard from Mr. Vladimir Putin regarding nuclear and events like that, which I think we have to. I don't think we have to panic, but I think it's important that these considerations must be taken to an effect and hedged against, for lack of a better term. So the factors that's affecting growth and stability in the world right now, I think from a humanitarian perspective, the most important thing is we have a global food and energy crisis going on right now. Ukraine is one of the world's leading exporters of wheat, and not only that, there's countries that will be in severe shortage without Ukraine exporting their commodities. And also we have the price of oil right now, which is becoming substantially higher as well. And I think we've all seen gold has moved up since December dramatically. It hit a peak in March. Since then, it's come down lower as well. These are all interlinked factors that are caused primarily because of what's happened in Ukraine. Additionally, we can say, let's look at China right now. You have a city of Shanghai in itself, in excess of 25 million people that are locked down. This is the financial center of China. Fortunately, we can say that Hong Kong, which always was the fourth biggest financial center in the world, maybe now is interlinked with Shanghai, yes. So Hong Kong in many ways can replace Shanghai temporarily, but not entirely by any means. So we have, with the lockdowns in China, this is further going to affect supply chain disruptions in the world, which of course I think it's pretty much, I don't think you have to be a financial person or highly educated to realize that any supply chain interruptions will affect businesses in Thailand, Malaysia, Singapore, Canada, United States, every country in the world in one way or another. So with that, not only the effects of the slowdown in supply, but what's actually going to happen in China? You have a property market that is basically a bubble, and it's been well known for quite a while. We saw some events earlier last year with a large Chinese property institution. If the Chinese government allows China to continually operate in the way it is right now, and we see people in China which are obviously very unhappy. I think we've all seen on television people screaming from their apartments and upset because they can't leave. There's food shortages. This doesn't go well for China at this stage. And you've also got a currency which is now, the Chinese government has to weaken the currency to create basically a hedge against what's happening in the country right now. So these are some factors. I'll go into further detail, but most importantly, we should look. Where's the most important thing is the origin. Where is the origin of where we should look at problems first, or what can affect a recession globally? And we must look at the United States first. The United States is the driver of the global economy. Currently, it still is the biggest economy in the world. In financial markets, we often say if United States coughs, that Asia will sneeze. That correlation may be falling away a bit more with the advancement of China. But I think what we really need to do is start with the United States and move on from there, if that's okay with you.
Let me go back a little bit to China policy. Do you think that this is the right timing now that China continue to do the lockdowns, or there is other reasons that China doing this other than because of the COVID?
I think that is a question. It really depends who you ask. If you ask somebody in Australia, and this is just maybe too much of a generalization, but I think many Australians will feel that, or some other Western countries as well. I don't want to just say Australia, but many other countries will feel that that China should immediately open and maybe operate in the same way that Singapore does. Learn to live with COVID, much like Thailand has done. Nobody wants to catch COVID, but we also have to have a country. We've all seen what happened in Thailand in 2020. People have to be able to live still. Now we have vaccination rates, which I believe in Thailand are substantially higher. I think most people now have 2 vaccinations. Many have 3. We've obviously seen the infection rate substantially lower, etc. But in China, I think we all know that if one person in a condominium building, for example, is infected, that entire building goes down further into a much stricter 3-week lockdown. I'm not a doctor. I don't have the knowledge whatsoever in that area. But what I do know is that, from the best of my understanding, that China wishes to use its own vaccination policy and mandates, as opposed to using mRNA technology. And I think we can quite safely say that, in my opinion, this is not working. And not only the fact that the Chinese government needs to keep everybody basically happy. It's an enormous population. Nobody wants to see a revolution in China. And honestly, I think it's the first time I've actually heard that word, and it's coming out of my own speech. But people are very unhappy. And China is a huge driver in the global economy. It is where the world goes to source solutions. And this would affect the global economy dramatically, including of course, Thailand, which when we're a lot of economists, which I'm not an economist, but a lot of economists say, yes, we are already in a recession, or we're on the cliff of a recession. It depends, but in my opinion, Thailand, I think, is on the border of a recession, but it really depends on numerous factors, whether Thailand manages to recover in time or not. And there's numerous influencing factors regarding that I'm happy to go into further detail.
Let me ask a side story about India too, because India taking oil from Russia now, and do you think that this is going to be the shift of power, as many say that India is coming up, but actually what India got from Russia is not the same amount that Russia exporting to Europe before, so it may be not helping Russia for the finance, the economy. So what do you think about this, India?
Russia wishes to be paid in Russian rubles. India is getting a great deal. They're able right now to buy oil at a highly subsidized rate. This obviously benefits Russia, but for India, ASEAN, as I've recently heard, ASEAN, their view is that we don't want to get involved per se. Let's just be neutral. So very much like Switzerland, who since I believe it was 1918 has been a neutral state. Whether this is not 1918, this is also a very serious scenario that can affect ASEAN over the next 1 month, 2 months, 6 months, year, forever. Singapore, as much as Singapore being a leading member of ASEAN, I highly doubt Singapore is neutral. I personally have spent many years, in excess of 20 years in Singapore. And Singapore is very much an ally of the United States. And I don't think that India taking this stance is positive for India whatsoever. Yes, it's a temporary solution, fantastic. But nobody really wants to take a stance unless you have to. But this is going to pressurize nations that have not taken a stance. It's going to be more and more very much like when in 2001 after 9/11, where George Bush stated, "You're either with us or against us." And it's important to note that this is not the situation happening right now. The invasion of Ukraine by Russia is not. Now the response is not United States against Russia. This is basically the G8 and most members of the G20 group of 20 nations and plenty of other countries against Russia. The only we could flip the coin and say which countries are supporting Russia in their. You could say North Korea, for example. Perhaps you could say India. That's not a fact, but it's a gray area at the moment. ASEAN, by not making a bold statement, is on the border there as well. Although I think NATO is wise enough to realize who's who. But yeah, so when it comes to India, I hope that answers your question.
All right, thanks a lot for this opinion. Also, let's go back to the US that you just left it off. Okay.
Yeah, sorry, please carry on.
Yeah, the US thing, that what's really happening now with the Fed and also the currency.
Yeah, this is really really exciting actually, and even last night with the CPI numbers that came out, some people, although I think it's highly premature, but some let's say a minor amount of economists are saying that possibly this could be the peak of inflation. That's definitely not the majority opinion. U.S. consumer price growth slowed dramatically in April. Gas prices, gasoline prices are off their record highs. That's good. This suggests that inflation is probably peaked, though it's likely to maintain these levels for quite some time still, in my opinion. But it may take the Federal Reserve Bank, the central bank of the United States, it may take their foot off the gas a bit, or further analyze what their monetary policy that they've incorporated so far, which I'll go into a bit further, how those effects have taken place, because it doesn't any effects of monetary policy or fiscal stimulus takes time to take effect at the bottom level. The consumer price index rose last month, the smallest gain since August, if I recall correctly. That's in contrast to the 1.2% month-on-month surge in the CPI, which was in March. And that was the largest advance since September of 2005. I mean, I think we need to look at the Federal Reserve Bank, what they're really trying to do. Their focus right now is to rein in inflation. If that has a negative effect on U.S. equities, so be it. They're not overly concerned. It is more important to rein in inflation and to get rid of stagflation. They've moved they've adjusted their monetary policy back to interest rates, which is after relying on balance sheet policies throughout the pandemic. They've raised rates. When they forecasted 6 or 7 months ago that they weren't going to raise rates until 2023. They also ended asset purchases, which is known as quantitative easing, which I think everybody's quite familiar with by now. That helps prop up financial markets. And that all started really in February 2020. The major sell-off from COVID took place on February 16th of 2020. It lasted until March 20th. I think anybody who can pull up a chart can see. You could even pull up a chart of the SET, and the similar effect took place. And that is the power of U.S. equities. If we look since December, I was speaking to a friend of mine in Hong Kong in December and asked my opinion on U.S. equities. And I said, personally, I would liquidate, if I had a higher exposure, which we didn't, I said I would liquidate the book. And that was on December 21st. Since then, the Dow Jones Industrial Index is down 12%. The NASDAQ is down 24 or 25%. The S&P 500 is down 15%. These are huge, huge losses of capitalization. And this will affect the United States dramatically. You can look at numerous companies. I think people will look at Tesla and Netflix and companies like this. And maybe you can say fundamentally they are a buy or not. I don't really want to go into talk about too much about equities and investments, but basically the downside for U.S. equities, in my opinion, is still further. Now we can't just look at U.S. equities in isolation. We have to look at the dollar index as well. This is very, very important. The U.S. dollar index is basically a pool of currencies, which is used as a measure for the U.S. dollar, as an index per se. It's the U.S. dollar index. We call it the DXY. Now the dollar index is up dramatically in the past 1 year. So those effects you can see on the Thai baht. We can look over the past few years and say, well, the Thai baht went down to 29. I believe the handle was around 29 a few years back. It went all the way down to I think it was 29.77. I may be incorrect there, but and a lot of especially foreigners in Thailand. This is not good for Thailand because obviously it makes Thailand more expensive. Since 2020, I'll go into maybe a few currencies here. Not only the Thai baht has moved back up, the Thai baht right now is around, against the US dollar, is around 34 and a half, 34.60 if I'm not incorrect. The Thai baht against the euro, this is very important. The Thai baht has strengthened against the euro but it's still within historical ranges. So what does that really mean? That means that a continuation of exports from Thailand to Europe should still proceed, and is better, of course, with a weaker Thai baht, but it's still within historical ranges. So that's important. The Thai baht against sterling. If we look at the Thai baht back in 2014, 2015, it was somewhere between 50 to 55 against the US dollar. Against the Thai baht. So what does that actually mean? That means that you're going to get you're going to have a substantially you're going to get more Thai baht for your sterling. Right now, that is moved substantially lower. I think we saw the low around about 36 or 37, if I'm not incorrect, in 2020, in 2019, I think that was. Right now, it's at around 42.60. So what that means is that for tourism especially, Thailand is looking to get tourists into Thailand from wherever they can, of course. So we have to look at countries like England, areas like Europe, European members that have euro-denominated currency. Also Japan, also Singapore, etc. But with sterling, sterling is now, although it's sitting right now, as I mentioned, around 42.60. The low was 37. The high was around 55 before Brexit. But that makes Thailand still a very attractive destination for people from the United Kingdom that wish to come to Thailand on holiday. And I think if anybody looks in the streets of Thailand right now, they can see there's actually a lot of British people in Thailand. The same thing with Australia. The Thai baht against the Australian dollar is pretty much at similar levels as it was in 2018. So that's really, I think a lot of Australians have pent-up travel demand. So Thailand has always been a very attractive destination for Australians. So I think we should see a good influx here as well. Singapore, right now the Thai baht against the Singapore dollar is the lowest in 5 years since 2017, early 2017, if I'm not incorrect. That makes it extremely attractive for Singaporeans, who we all know Singaporeans are well capitalized. They have plenty of disposable income to visit Thailand, and that's really good for obviously the travel industry. The yen, that's another sign. Because the yen is highly correlated, there's a very close relationship between the Japanese yen and the US dollar. As I mentioned earlier, the US dollar index, that affects the yen a lot. So because the US dollar index has moved so much higher, the yen has weakened dramatically. So the yen, the Thai baht has also strengthened against the yen. So that means it's more expensive for Japanese people, not only to travel to Thailand, but basically to leave Japan. I haven't looked against most other currencies, but definitely I know against the Thai baht that it's more expensive for Japanese travelers.
I see. So this is overall pictures that you can give us the whole perspective. I see more what's to come. And for investors, big and small, how do you recommend them? Is it time for the investor to come back to the Thai market, like capital market, also general investors for other business industries too? What do you usually recommend them now?
I would say personally that Thai REITs are attractive. Thai property REITs would be a profitable entry right now, or it should be attractive at least. I think the downside would be limited, with the upside substantially higher. Gold as well. Personally, I think gold, we will retest the highs of that went over just over $2,000 US an ounce a few months back. Until there is genuine stability within Europe, we can anticipate that we will see a movement of capital into safe haven assets. With Thailand, the appetite from the not institutional, but from retail participants, the man in the street, the average person in Thailand, for most people, I believe that gold is still, we can still see upside on gold. Definitely now is not the greatest time to buy it, but personally, I would any move below $1,800 an ounce, I would be a buyer, and any sales north of 1975, 1980, 1,975, those levels and higher, I would start to offload some. But I think we will see. You can just see whatever effects take place in Ukraine. The correlation between gold price. Gold has always been a safe haven. I think Thailand knows that very well from 1997. I think your knowledge there is substantially stronger than mine, but I was working in Singapore at that stage, and I recall very, very well. So for investments there, but in the SET, I think there's personally myself, I've always looked at companies that like Minor, for example, when you have luxury hotels, Anantara, St. Regis, externally outside of the country. They have other within Europe. They have new investments there. Also within outside of the hotel group, they have substantial exposure into food and beverage. I personally think that that's a very attractive firm, exceptionally well managed. But also we can look at maybe companies like Erawan. Bangkok Airways. I've always been attracted to Bangkok Airways. I think that it's very well managed. Thai Airways, obviously, I think that's a discussion nobody would want to kind of look at the moment.
Not for now.
Definitely not for now. I think that's a risk profile that's quite high. But yeah, that is my personal perspective.
I see. I have another thing with the Bangkok governor's elections coming, but maybe it's not anything with you to concern. But I like to see your view as a foreigner and expat living here for quite some time. So do you think that Thai politics is a really big concern for business investors from other countries, or because we've been going on like this, the coup d'etat up and down, and also the business coming up and down, but the strength is in the economy overall for the growth of Thailand in the region. So what do you think about this? For example, you have to advise people to invest in Thailand, like set aside the politics, it's just like that, or what kind of advice you give to them?
No problem. I'll just step back one moment to answer that question, to give it a bit more background. I speak to numerous large Thai institutions, asset managers, and we call them buy-side participants, hedge funds, asset managers, and family offices, as well as individuals which are in the treasury and banks and economists. And basically, everybody's always looking the same thing: assist us in getting investment into Thailand. But there's one thing that is crucially important for an investor. If you put yourselves in the shoes of a regional investor, let's say in ASEAN, let's say you're a Singaporean company, and you have excessive capital that you're looking to allocate to an economy regionally, that you want a low risk profile, and you see growth. Investors are in reality are very, very simple. It's a simple equation. It's not complicated. Investors want stability, risk management, and stability are impeccably cannot be the importance cannot be understated. Nobody likes uncertainty. Financial markets detest uncertainty. As long as there is certainty, people will invest. So to answer your question, as soon as there is certainty in Thailand, meaning the world, I'm not going to state whether I feel that Thailand has political stability or not. I think everybody has their own view. But it's irrelevant what my perspective is. The perspective is on large institutional investors, sovereign funds, pension funds, providents, large corporate investors, hedge funds that look at Thailand and say, okay, look, we want to invest some serious capital here. We believe that Thailand has, they've seen the pain already that took place because of the COVID. We see the country is well managed now. As soon as they see that, and they believe that the country is happily democratic, and that everybody, you're never going to have everybody happy, but as long as the world sees it like that, they will invest in Thailand. It's as simple as that.
I see. I understand more about this. So please tell us a little bit about your primary asset partners, what your major business, and are you going to expand in Thailand?
Yes, Primary Asset Partners, we basically, we are an advisor to institutional investors globally who have interest not only in Thailand, but who have various interests within Korea, Japan, Singapore, specific countries where we have a knowledge, deep partnerships, and we work within a variety of industry spaces and structures.
So thanks for giving us the overall pictures of global economy, currency, perspective of Thailand economy. That's คุณ Terrence Walsh, CEO of Primary Asset Partners. ขอบคุณมากครับ
Thank you so much for having me.
And that's Voice of the Nation today. You can watch our program every Monday through Friday at 8 p.m. I'm วิทยาแสงอรุณ สวัสดีครับ